is 1:07. On February 11th, I'm going to call to order the Financial Audit Advisory Committee. I'm Wendy Ravelli, your select board representative, for chairing the committee today. I thought it's been quite a while since this group has met. I thought it might be a good idea for all of us to just go around the room, introduce ourselves. And I'm going to start this process first by also recognizing that we have some people that are remote. So any votes or discussion that we have today, I'm going to have to do a roll call vote. So for opening the meeting today, I'm just going to start by calling on Brian. You're present for the meeting. Sandy.
Yes. Present.
Right. Yeah, all right. And Brett Faves.
Present.
Here. Boards.
Court booth, just to be school committee rep. No, that long.
Another at-large. Okay, with that, we, like as most committees that we have, we offer the opportunity for public comment. Usually public comment is 10 minutes, limited to about 3 minutes per person. If there is someone who is remote and you want to speak during public comments, I'll just ask that you raise your hand. And then is there anybody in the room here who wants to make public comments? There's a Mark, okay.
Mark, you're
free to make comments. You will not be on video, just so you're aware.
Mark Martinez, 66 Alfred Circle. I serve on the Economic Vitality Committee as well as the Land Use Group, but I'm speaking my own personal capacity. The feedback, I can hear feedback on my end. Is that just my just a quick observations. We're sort of at an unprecedented time in the town as far as former CFOs suing the town. Our finance department hasn't been able to reconcile books and records in a timely fashion. We have a 2024 audit report that notes material weaknesses in internal controls. And this committee, I don't think has met in over a year, maybe 18 months. One of the things that I'm trying to work on and focus on is improving town governance and transparency. And my observation is there's just too many abnormalities being discovered by citizens via FOIA requests and response. And if this were a private company with for material weaknesses, I think senior executives' jobs would be, at risk. If not, those individuals would be terminated. I think the big question really is, what should citizens really care about? Or is this just normal government, non-compliance? So I'm hoping that this committee can re-engage and help the town do a better job at financial reporting and operations. Thank you.
Thank you, Mark. Appreciate the comment. Is that the only? That's the only hand raised.
Yes.
Cindy.
Yeah, that's the nope, that's the only Mark was the only one who had his hand up. Mm-hmm.
I'm here, nothing to add.
Okay, thanks, Cindy.
Right.
All right, with that, we'll move on to our next agenda. We have minutes from the last meeting, which did not occur until November 6th, 2024. I recognize that there are only 2 other members outside of myself who were present during that meeting. I think that might have been Bruce, that was you. And I don't remember who else was in that minute, but I don't think Court, you were not here, Bianca was not here, Cynthia is no longer on the committee, but Brian, you were the other member who had participated. I just want to recognize that for those who have read the minutes, appreciate your comments, but you have the right to abstain or vote in support of the minutes either way. But let me just start with questions about people have questions about these minutes. Again, it's been kind of long since they were good. You haven't seen them. They were part of the packet that was distributed. Brian, did you get a chance to see them, read them?
Yep, I went through them. I just had one typo correction.
Okay.
Just spelling of my last name in section 3.
Okay,
No E at the end, but otherwise, no other questions or comments on them.
all right, well, we can certainly correct that for sure. With that, can I, any more discussion on the minutes? Can I entertain a motion to accept the minutes?
I move to approve the November 6, 2024 minutes.
So, second, thank you, Court. This has to be a roll call vote, so I'll just go around the room and then online, Court,
Aye.
Bianca? Abstain, because that's okay, yep,
Abstain.
okay, okay.
Abstain, that was in here.
Okay. Brian?
Watterson, aye.
Aye, okay. And Sandy?
Bishardi abstained.
Okay. All right, you've abstained, Brett, and I'll accept them. So there's 2 yeses, 4 abstains. So I don't think
Carries.
motion still carries. Okay. Well, thank you all. And my goal there, I'll just acknowledge there also is no recording from this particular meeting. Typically, those recordings are sent right to MMN and posted, but that did not happen for this meeting. So I just want to acknowledge that. Right. But we have these minutes, so you'll get these posted. Okay, with that, we are going to then move on to our main attraction here, which is our review of the FY 23 town audit. And I don't know, Jennifer, would you like to introduce Scott McIntyre? I don't know if he's got other members of his team here to present.
Well, first I'll introduce myself.
Yes, sorry.
I'm Jennifer Barrett, I'm CFO. And I have worked with Scott in previous communities, and we've been working with Concord for years. And Scott was originally with Lansing Heath and then Markham, and now the company is called CBiz. So you'll see that as the letterhead there. And Scott is joining us from Zoom today to give us kind of an overview of what is included in the financial statements as well as the management.
All right, Scott, we'll turn it over to you.
Okay, thank you. As Jennifer was saying, there's been a lot of changes in public accounting in the last couple of years, particularly my industry. So probably 2 years ago, I was in front of you as Melanson. I think I was probably in front of you last November as Markham, and I'm in front of you today via Zoom as CBiz. The reasons for that, I think I probably told the committee last time I was addressed the committee, was that with students not going into accounting these days, we needed to avail ourselves of a larger firm with additional resources. And that's why we became part of Markham. We had no idea that less than a year later, actually slightly over a year later, we would be acquired by CBiz. Nonetheless, the governmental practice of CBiz really, for lack of a better phrase, runs through New England. The majority of the firm's governmental work is here in New England. So it's the same players that were part of the audit team in Concord. Myself, and you've recognized the name Sarah. There's Andrew and a few others that have participated, and Zach Nolan, that have participated in the audits in Concord are still present here in our firm. And I appreciate the opportunity to join you today to give you a brief overview of our audit of your June 30, 2024 financial statements. I did put together a little PowerPoint presentation, and I'll share my screen in just a few minutes. I think it probably will be the best way to facilitate the conversation. And I will try to, walk through this, and then I'll try to take any questions that the committee may have. So let me take just a second and share my screen, if I may, please. It looks like I've sent a request to share the screen.
Been approved. So
Okay.
Just give it a minute, Scott. Okay, you should have access.
All right. Yeah, I think you should see a PowerPoint presentation up here for just could someone confirm that you're seeing the screen okay?
We are, Scott.
Great. Thank you.
Scott, can I just ask, can you make it larger?
Yes, I can. How's that, Wendy?
And that's better. Yep, thank you.
I just started with a quick agenda. Today we're going to discuss the audit of the town of Concord. I think about 2 weeks from today, I'll be joining you again to discuss the region's audit as well as the CMLP audit. So I just wanted to make sure that that's what it's been indicated to me, and that's what I'm prepared to do today. I'm also going to give you an overview of the financial statements, talk to you about our opinion on them, talk about the fact that there are dual perspective financial statements in there. And on one of the slides that I have in this PowerPoint presentation, it hits the highlights. In the past, I've gone through a number of different pages. I've tried to put them on a couple of slides here to facilitate the conversation. And then at the end, we'll walk through, I'll call it the GAGIS, or Generally Accepted Government Auditing Standards Report, also thought of as a management letter. It does have, and I think I heard a gentleman speak earlier in this call. It does include a couple of material weaknesses. To my knowledge, and I haven't been the partner in charge of Concord for all the years that Melanson and Markham and CBIZ have been involved with Concord. But I've been periodically I've rotated on and off the audit. To the best of my knowledge, this is the first time that Concord has received a material weakness in internal controls. I would want to point out, because it's based on my experience, and I've been auditing governments in the Commonwealth for close to 40 years. We've seen this happen from time to time. Concord's not the first community that we've worked with that has not had material weaknesses in internal control, and then with simultaneous turnover in the finance department and computer conversions. Those two things, that when they occur simultaneously, it is not uncommon for us to see a breakdown in internal controls like we did in the town of Concord in fiscal year 2024. So I just wanted to share that as part of the opening agenda. Getting into just a quick overview of the reports. Nothing. No news here, but the reports that come out of the financial statement audit is our opinion on your financial statements. It actually says opinions, plural, because there are multiple opinions in there. We do not give an opinion on your management's discussion and analysis and some of the other schedules that go in there. And we also are required, because of when we follow government auditing standards, which we had to in Concord, we are also required to report on your internal controls over financial reporting, and that's by and large what is referred to as the management letter, and that's where the definitions of material weaknesses and significant deficiencies exist, and what those issues were, and we'll get to that later in this conversation. Scrolling down, just this is a slide that we have in almost all of our PowerPoint presentations when we meet with audit committees or select board members, just to remind people about what the audit process is. We go through and we perform a number of procedures, the objective of which is to obtain evidence to support the amounts and disclosures in your financial statements. We perform a number of internal control evaluations. We do that by understanding the systems of checks and balances that are present in the town, and performing walkthroughs of transactions, where we will select transactions and walk them through from their origin all the way through to completion, and where they are presented in the financial statements. But as in any audit, or I should say in any general purpose audit, it is not designed to be an opinion on the effectiveness of your internal control, but we do obtain an understanding of the checks and balances enough that we can report where we see them significant deficiencies or material weaknesses. So an overview of the financial statements. Again, there's on here it's on the next slide. There are some page references, but our independent auditors report. I often, when I speak about this, the way I categorize it, it's really what you pay us for, our opinion on your financial statements. Everything else that's in the document belongs to the town of Concord. And our opinion is an unmodified opinion. Sometimes we hear it referred to as a clean opinion. That's fine, but technically it's called an unmodified opinion, meaning there are no modifications to our opinion. In fact, since to your financial statements being materially fairly presented in accordance with generally accepted accounting principles. Following our opinion is your management's discussion and analysis. This is a great place for readers to go back to at a later point in time. When I say later, after walking through this presentation, maybe looking at some of the balance sheets and operating statements and cash flow statements. The MD&A, or management's discussion and analysis, is a great place to go back to really see some of the highlights that occurred during the fiscal year financially. Reminder to the committee that these are what we refer to as dual perspective financial statements. Both the government-wide financial statements are your what we call your long-term perspective. That includes all of your capital assets, as well as all of your long-term liabilities, the bonds payable, the pension liabilities, the OPEB liabilities, all those long-term nature accounts. Then also included in here, if we have a long-term perspective, there's also a short-term perspective, and those are the fund financial statements. Most of this conversation will be on the general fund, the main operating fund. It's presented on a basis which is technically called modified accrual. For those that aren't familiar with this process, it's pretty close to a cash basis. There's obviously differences between the modified accrual basis and cash. It's much more aligned with the cash basis model than it is the accrual based model. You also have your notes to the financial statements and required supplementary information. And just a couple of quick notes for fiscal year 2024. The town had the same major funds. Major funds are defined by the accounting standards. If you look on your general fund balance sheet, you'll see a couple of other columns there. You'll see a capital project fund column, as well as a federal grant fund column. Those mathematically meet the definition of a major fund, so they're presented separately. And those that don't meet the definition of a major fund are in a column on your same page as your general fund balance sheet called your non-major governmental funds. Really an aggregation, if you will, of all the small funds that are present in the town of Concord. What you'll see on your statement of revenues and expenditures is that there were substantial middle school expenditures. The capital project fund for the middle school expenditures occurred in fiscal year 24. You sold the debt in fiscal year 23. You spent most of the money in fiscal year 24. So that's why you see, if you were to compare the 2 years, they are almost opposite fiscal years, but that's just the way the modified accrual basis of accounting works. During fiscal year 24, you also implemented GASB statement number 100. It's called accounting changes. You see that on page 19, where there are some changes. The impact of it is really, it's really uneventful. And looking beyond fiscal year 24, as we often do with Concord and other clients, you should be aware of a couple of additional GASB pronouncements that are present for fiscal year 25 and beyond. This list is not all inclusive. We're already up to GASB statement number 105, but I think you should certainly be aware that for fiscal year 25, GASB statement number 101, dealing with the changing of the definition for compensated absences, will apply. And I think it's in FY 26 that GASB statement number 103 will be applicable. That includes the financial reporting model improvements. A couple of years ago, that was going to be a major statement. It's not that. It turns out they didn't make a lot of changes, but given the fact that you have the light plant with a different year end, that's GASB statement number 103 should be evaluated for when it really needs to be implemented. So because the light plant's 12/31/25 financial statements will roll up into the town's 26 financial statements. So you just need to be very careful of that. Getting into some of the key operating results, and this slide really takes the place of walking through some of the pages. That's why you see certain page references here. First, talking about the town's general fund, which is really, even with the dual perspective financial statements, the general fund balance sheet is almost always the first place that most readers are going to turn to look at the financial stability of the town. And if you look at your general fund balance sheet, so it's that first column of numbers, and the third number up from the bottom, the unassigned fund balance, or UFB, had a June 30, 2024 balance of $17.9 million, represents an increase of almost $5 million over the prior year. That almost $5 million increase really is a direct result from the strong results of operation compared with the budget. And then you can see that detail on page 84 of the actual print page, 84 of the actual document. So it's the strong budget versus actual results of operations. On the revenue side, it was really like most communities in fiscal year 24, the investment earnings for Concord drove much of the favorable budgetary results for fiscal year 24. And another page reference here, going back to MD&A page 9, or management's discussion and analysis page 9. There's a great table in there that shows the trends of not only your unassigned fund balance, but your different types of fund balances, and shows the percentages. A key metrics for local governments is almost always what the general fund unassigned fund balance is as a result of when compared against overall expenditures. And for June 30, 2024, that percentage was almost 14%. So the unassigned fund balance of 17.9 million represents about 14% of expenditures. Credit rating agencies and financial institutions will view that very favorably. And it's the type of balance sheet that has existed in Concord and similarly rated communities for several years. Back to the slides here. Again, page 9 shows the trends in fund balance accounts and the percentages. I also want to point out that the general fund also has a restricted fund balance of just under $10 million, $9.8 million. That's your pension reserve fund. And lastly, you have a significant amount as a committed fund balance in your general fund of about $9.6 million. About half of that is your middle school stabilization account. And stabilization accounts can show up in a couple of places in your financial statements. If it's committed for a particular purpose, which in this case it is, the middle school stabilization, it's shown as a committed fund balance. Again, about half of that $9.6 million represents the middle school stabilization. The other half of it, the detail can be seen on page 60. It's a number of different things. Like I said, about half of that 9.6 is the middle school stabilization. Moving into the long-term perspective financial statements, not really going to talk so much about the capital assets. Most readers, when they look at local government's long-term perspective financial statements, they think of two accounts, and that is the net pension liability and the net OPEB liability. So I've got a few bullet items here that kind of address that. I think the number one thing I would point out is that your pension system is about 90% funded. I would also want to point out that they are using a 6.5% discount rate. Basically, that's what the expected future earnings are for the plan. I think the town went to reduced the discount rate a handful of years ago. And I think it's consistent. That reduction in a 6.5% discount rate is consistent with many of your peer communities throughout the Commonwealth. The current funding schedule that's been approved by PERAC, the oversight agencies, shows the past service costs being fully funded by June of 33. 23 would have been a couple of years ago. So I think that's important to note. While there's certainly a difference between the accounting for pensions and the funding of pensions, which I could get into, but I don't plan on it today. Essentially, what that second bullet item means, to me at least, is you keep doing what you're doing, and by June 30, 2023, everything else being equal, your pension liability will be zero. And when I say everything else being equal, that the results of the pension plan are consistent with the assumptions that are used. One of the key assumptions, of course, is the discount rate. The third bullet item on the long-term perspective deals with OPEB, or other post-employment benefits. And what that's really talking about is retiree health care. The town's plan for this is about 68% funded. And with that plan, you're using a discount rate of 7%. Your actuarial report, which was produced by your external actuary, shows that the town's plan is to fully fund that by 2039. Collectively, when I look at those two percentages in bullet item number 1 and bullet item number 3, we work with a lot of communities throughout the Commonwealth, and collectively, those two liabilities, those two funding percentages, excuse me, are about as high as I've seen. So congratulations on that. For both pension and OPEB, some of the key assumptions beyond the discount rates, which I've highlighted on this slide, can be found in footnotes 29 and 31. And this is also where the required supplementary information can be beneficial to certain readers. In essence, the required supplementary information has 10-year history of the funding for pensions and the funding for OPEB. Now, the funding for OPEB hasn't been it's not 10 years old. The accounting standards associated with OPEB are less than 10 years old, so there's not 10-year history yet. We're working up to it. But pension, this is the first year that I believe that all 10 years are presented. So beyond that, on the next slide, I wanted to. Yes?
Scott, let's ask a question on OPEB. The information comes from our last evaluation, actuarial evaluation, which was what, January 1st, 23. And our next one is what, 20, is it coming up, or have we had it?
We received it today.
We received it today. Okay. And I guess my question was, is it typical that most communities are doing that evaluation every 2 years?
Yes, it's very typical. I'm sorry, if I interrupted you or answered too early, I apologize.
No, you were spot on. And the same is true for the pension?
Yes. There are occasions when governments have gone and done evaluation back-to-back years. I don't remember. Concord did this a couple of years ago, I believe. But I think it's been a few years since you've chosen to have one done every year. But by and large, the requirement is to have a full valuation every year. And of course, in the off years, you need to update the reports that the valuation deals with the funding side of things. That has to be done every 2 years. The reports that you get from your actuary for both pension and OPEB have to be done annually for the measurement period for each audit, essentially. But the census data that gets valued can be done every 2 years.
All right, thank you. Appreciate it.
So I wanted to, this last slide here talked about the strong budgetary results on page 84. I put this slide together just to give you a brief indication of where the positive results really came from. And it's nothing more than your budget versus actual page on page 84, summarized into just a couple of lines. The top line there, the revenues, I'll just call it revenues, because the revenues and transfers in, you can see that there's about 3.6, almost $3.7 million. The inflows exceeded the expectations by $3.7 million. The largest singular line item on your financial statements that contributed to that was the investment earnings. And you can at another point in time, go to page 84 and see the detail. Unused overlay was also a nice contributing factor to that positive number. On the expenditure side of things, unspent and unencumbered amounts were almost $2.5 million. Those were pretty well balanced between all the various functional categories that you are required to report in. You do show in that last column numbers it's shown as a negative. That's the use of fund balance, use of free cash, if you will. Certainly, anytime you're using free cash, you are expecting the outflow of resources to exceed the inflows of resources. So, and that's why that's shown as a negative number. It's what you planned on doing. And so as a result, then you take into effect the use of that money in the expectation that outflows were going to exceed inflows to come down to a realizable net number. In your case, it's $3.4 million. And that 3.4 million is what drove the almost $4.8 million increase in your unassigned fund balance. Those numbers don't tie exactly. There's so many other things that go on. But if there's any one single takeaway, thinking about your unassigned fund balance going up over $4 million, this bottom line number on this slide right here of $3.4 million is what drives that change. All right, moving down to the issues that we've classified as material weaknesses, and if you have the financial statements in what we call the GAGAS or GAGAS, the Generally Accepted Government and Auditing Standards report. Opening letter talks about what we did for audit procedure, not for audit procedures, the audit standards that we followed. It gives you the definitions of those two categories of issues, significant deficiencies and material weaknesses. And of course, I think it also has a little bit of a disclaimer in that opening letter that, hey, we didn't look at every single transaction going through the books and records of Concord, but based on our test work and our evaluation of the internal control, we identified what we categorize as 4 issues that rise to the level of a material weakness in internal controls over financial reporting. So I said in the beginning, to the best of my recollection, this is the first time in the many years that I've been either the partner on the job here in Concord, or I've been maybe a concurring partner. I had some other partners that rotated on and off over the many years. To the best of my recollection, this is the first time this type of an issue has arisen in Concord. The first one is dealing with cash and receivable reconciliations. The controls over that in the completion of those reconciliations broke down during fiscal year 2024, and really it took almost until March of 2025 for the cash and the majority of the receivable reconciliations to be complete and accurate. As of when we wrote the report, dated last November, I think it was, there were a couple of receivable accounts, particularly dealing with water and sewer receivables, that still had some variances that needed to be resolved. The second material weakness dealt with the cutoff and capitalization controls. Cutoff meaning our invoices, this is on the expenditure side or cash disbursement side of the internal control system. The first one being cutoff are the expenditures recognized in the proper fiscal year? And at year end, June 30, 2024, one of the audit procedures that is performed in every audit is what we call a search for unrecorded liabilities. We identified a couple of liabilities that should have been accrued back to June 30 of 2024, but actually were represented in your fiscal year 25 ledger. So those were some significant adjustments that we needed to pull back, if you will, because the goods and services were received in fiscal year 24. So the liability and the expenditure had to be recognized in fiscal year 24. Capitalization controls deal with the accounting for your capital assets. You have capital assets in both your governmental activities, your water fund, your sewer fund, and your light plant fund. There were significant adjustments required in this area as well. And there was also some significant back and forth with the accounting records from the town to our firm, that where we needed to push back and say, some of the costs that might have been incurred I don't have the specifics in front of me, but as an example, costs that were incurred in the water fund were put on with the sewer capital assets. And we had to go back and say, I think you've got this in the wrong bucket. So there was some back and forth associated with that. And it was in mid-October of last year that we finally received the complete and accurate listing of capital assets for incorporation into your financial statements. The third material weakness that we identified was with your budget posting. And that was that there was a difference between what was posted into the accounting system. It was what was actually approved from an appropriation standpoint, as well as the expectations for revenues. These were not huge variances, but the fact that they didn't agree indicated that certainly the likelihood of an error could have occurred, since the actual budget as posted to your system did not match what was appropriated or expected for revenues. In the last material weakness that we have in that report deals with internal controls over journal entries. And I think this probably goes back to the turnover that occurred in Concord during fiscal year 24. Stated as simply as I can, journal entries, when they're made to an accounting system, there should be a preparer and there should be a separate person that is essentially the reviewer, providing that check and balance or that double check. Anytime there's one person that can make journal entries without anyone else seeing or approving that increases the risk that something could go wrong. And that's why we classify this issue as a material weakness. Essentially, just to repeat that, during fiscal year 24, the same person who was preparing the entries was making the entries without any documented approval by any documented oversight from another individual. Journal entries are something, this is the second time I'll say this today, is a test that we do in every audit. I mentioned we do a search for unrecorded liabilities in every audit, and we test journal entries. By and large, we don't always talk about the audit procedures that we do, because that would be sort of talking about what the questions are going to be before you administer the test. But I think it's very widely known that in any audit, auditors are looking at the controls over journal entries, and they're looking at cutoff controls. So that is a quick walkthrough of the 4 issues that we identified in our fiscal year 24 audit as material weaknesses. It's also a very quick walkthrough of your financial statements. Again, the financial statements, I go back to the slide that I had up a minute ago. Your unassigned fund balance of $17.4, I think it was, $million. A very consistent looking balance sheet. When I say consistent, I mean with prior years. There's a nice increase in that key account, and it's a balance sheet that's consistent with similarly rated peer communities in the Commonwealth. So the last slide I have up here is just something that probably goes without saying. We're not walking through the entire audit here. So this presentation should be thought of as a tool to assist the committee in understanding things. It's not it should be observed and heard in conjunction with reading the audited financial statements and the related disclosures. So with that, I'll stop sharing my screen and I'll turn it back to the chair, and I will do my best to answer any questions that the committee may have.
Okay, great. Thank you, Scott. I appreciate your walkthrough of those issues. And I guess you're going to pass on the presentation at some point following the meeting.
I'm sorry, what was the very last part there?
I assume you're going to pass on this presentation so the committee members can have that. We don't have that. Yeah.
If you could just email it to me, Scott, I'll make sure it's available.
Okay.
Of course. Thank you.
So let me just start. Were there any questions about the financial reports themselves? I want to save management findings and material weakness items as a separate discussion, but I just first want to just ask, are there any questions on the financial statements? I know I read through all of them. Others may have a different lengths, but I just go around the room. Are there questions on the financials themselves?
I'm not an auditor, but I looked through it as, I hope I'm not a report, looking for, what was an anomaly, what did make sense to me, what looked like it was a troubling trend, and didn't find any. That's why I looked to Jennifer and Scott for what did I miss? But it looked, from that perspective, looked clean.
Great. Dan, any question?
I do have a question, but I think it kind of leads back into the material, is that it's important. general one, I'll leave it as a question, you can take it whenever.
Okay.
I wanted to go ask about the quality of the opinion. You mentioned these material weaknesses, and then you mentioned earlier on, you mentioned the opinion was, I think it was, I would say unqualified, I think using
He used unmodified
unmodified.
and called it equivalent to clean, but I'll let Scott speak.
Unqualified. So, but if there are material weaknesses, and if I may have read this incorrectly, but it sounds like some issues are still outstanding. Was it the capital accounts or water and sewage or something like that? Was it, are these, is there a confidence that these are all correct, or is there a percentage of like, it's like 90% correct or 99% correct, or?
I don't know if that's Jennifer or Scott. Maybe, Scott, when you finish the audit, it sounds like there were some issues outstanding that weren't closed, or some outstanding variances. I don't know, Jennifer, do you want to add to that, or?
Well, let's Scott, just did those impact the statements themselves? I guess.
If I could try to answer that question, it is a clean or an unmodified opinion. The internal control deficiencies, the material weaknesses, cash ended up getting reconciled. The majority of receivables get reconciled. The ones that didn't get fully reconciled are at a level that we consider them immaterial to the reader. And so we did not need to modify our opinion because there's a couple of accounts that are still unreconciled. It's still something the town should address, but it didn't rise to the level. Pardon me. You got it down to a level, the variance between the general ledger receivable accounts and the detail receivable accounts. You got that down to a level that we could say this isn't going to move the needle, for lack of a better way of saying it, for a reader, even of your enterprise fund financial statements. So the material weaknesses are present because during the fiscal year, things could have gone wrong. In the end, cash got reconciled. Most receivables get reconciled. The town agreed with us that these expenditures that were originally posted to 25 needed to come back into 24. So all those adjustments are present in your June 24 statements. So the material weaknesses still exist, but there can be a clean opinion on your financial statements because adjustments were made during the audit process. I hope that answers the question.
Yes.
Can I piggyback? So I have a lot of questions on the material weaknesses when we get their instruction process, but particularly to this point, were there any unadjusted differences or past adjustments that aren't booked in the financials for fiscal year 24?
And that last thing, did you say that aren't?
That were not, they were past, that you identified should be adjusted and weren't adjusted.
If they were immaterial, we would have noted them on what we call a past adjusting journal entry. And there were some.
There were some.
Yeah.
Okay, we should get those. And what was the threshold that you used for materiality?
There's several thresholds, and I'm going to answer your question in a minute because I know what you get. I think I know what you're getting at. Goes back to when I said we have a clean or an unmodified opinion. I'm pretty sure I said in this conversation that there's actually multiple opinions in there. If I didn't, I think that's an important thing for readers to understand is that there are, we give an opinion on your general fund. We give an opinion on your federal grant fund. We give an opinion on the water fund, and then we give an opinion on all the small stuff that gets aggregated together. So when we do that, we have to assess each opinion unit has its own materiality level. So the technical answer is there's not just one number. What you're probably asking me is about the general fund, and that's the fund I've talked most about today, and I suspect that's what you're asking about. And what I think we did, I could look it up. It would take me some time, but I could look it up. But I think we did about 2% of expenditures.
But as you say, there are different thresholds for different entities. Is that something that you've historically disclosed to the town as to what you used after the fact?
Have we historically done that? I think we probably have. I don't know the answer. Sarah, who's been the audit manager on this account for many years, would know that off the top of her head.
Thank you.
It's really but quite honestly, it's our judgment
Right.
based on the standards.
I have a question on the investment fund, so it looks like our, the actual revenues exceeded the budgeted by. Yeah, it was a couple $1 million difference on the investment income. Can you clarify which accounts, which funds were invested and like, do we know, or, and maybe this is a question for you guys, are we invested in equities? And I'm asking this because, you know, next year, if there's a big market movement and we're invested in equities, we could see a big number drop. So I think it's important to know what it is we're invested in now. And if there is a breakout of like an attribution somewhere for where those investment funds, attributed from the investment.
Scott, I know you speak to this in some of your notes. Can you point out where some of that information is? In the
Sure,
notes?
but if I could first,
Yes.
because I think the question came relative to the almost $2 million favorable variance
Yeah.
on page 84. And with that, page 84 is only your general fund. So this doesn't take into consideration your pension reserve fund. It does not take into consideration your stabilization funds. It does not take into consideration your OPEB fund or your pension fund or anything like that. It's strictly your general fund. And you are very limited in your general fund by the general laws of the Commonwealth with what you can invest in. Pension and OPEB is far more wide open. You know, in the general fund, it's you're really investing in short-term issues within your general fund. Now, with that said, most of the disclosures that Wendy, I think you were asking me to point out where in there, most of those disclosures on your investments deal with your pension fund and your OPEB fund, and maybe even your I'll call them your permanent funds like cemetery perpetual care funds and things like that. The general fund investments would not be well laid out in your footnotes.
But they're mostly bank statements. I mean, they're local, I mean, very limited. tools
Yes.
that-
Yes.
That's a good point. Those are in the notes as well.
Yeah, if I could, so general fund is limited to investment in cash equivalents, and there is a legal list of 25 stocks. We don't have anything invested in stocks. I think maybe your question is, where did that come from and why was there such a variance? That came from the middle school bond proceeds that we had on hand in that year. We had, I would have to go back and look at $10 to $20 million worth of bond proceeds that we had on hand. And that investment income is largely related to that. It is one time, and so it's not built into the budget. We didn't make an assumption that large for investment income in 24.
And so that $20 million was invested in short-term
Yes.
issues and then, and it's still 10% return. That's quite large of a return for long-term issues.
Yeah.
As the that particular year, interest rates were significantly higher than normal.
Yeah.
Anything else, ma'am?
No.
Bruce, any?
My concern with this is the fact that cash and receivables were not reconciled on a timely basis. And that would concern me greatly.
Yeah.
Because we really don't know what's going on.
So I want to ask you, I think we all had that same question. The cash and receivables. Scott, this was not a new issue. And then last year it was identified as a significant deficiency, and I think the variances was about $100,000. So to your point earlier, Brennan asked, what's the threshold? You said 2%. What is the difference between a significant deficiency and a material deficiency? Why now is it raised to this level?
You're right. In fiscal year 23, we did have a significant deficiency. I believe it was just focused on water and sewer receivable
Yes,
reconciliation.
it was. Correct.
And in fiscal year 24, you went all fiscal year without completing the cash reconciliation, bank statement to cash book to the general ledger, and extrapolate that same thing over to the receivables. In fiscal year 24, it wasn't just water and sewer receivables. It was real estate, property taxes, personal property, and I think motor vehicle excise as well, that you went all year without knowing that the balances in the general ledger, did they agree with the detailed list that you have in the tax collector software. That receivable issue in 24 is significantly different than the water and sewer receivables in fiscal year 23, where there was roughly $100,000 difference between the general ledger and the detail. Last year, we did call it a significant deficiency because there was a reasonable size difference there. Going all year without completing the reconciliation, that's what drives it up the ladder, if you will, from a significant deficiency to a material weakness.
Wendy, I wonder if Jennifer might be able to address where
we
we are with fiscal 25 and what's happening in fiscal 26 to help with the conversation. So we've been focusing on moving forward. FY 25 has also been reconciled cash and general fund regular receivables. Those are actually through through June 30th, 25 is complete. We have through September of 26 also complete, at least through cash book to bank statements. We're working our way through the general ledger as well. And the next phase, we're working kind of quarters, is in process as well. So this 1 year lag was due to timing of software conversion, timing of staff turnover, and we're catching up, and we will be on target for ending 26 within that 45-day window.
Great. So that's the cash reconciliation. That's cash receivable.
The water and sewer, we're working on staying current. And then we're taking the 630 balance and we're working current as well as backwards. We're putting extra hands on finding where those reconciling variances lay in prior years, because they do go back some. Part of that is a step. Our people handle sewer and handle the vehicle and personal property in that state. So we're working on setting up that process to move forward in maintaining those balances in an easier, cleaner way.
Not handled the same way because they're coming from different systems.
Right, they're coming from an outside system to put in, so the information coming in is not all being passed along essentially. So we're working on finding the different reporting mechanisms that we can use to maintain our side to match.
That's the NISC system, right? Yeah. I mean, it's always been a challenge, but I think it's good that you're making progress, and this might be a topic that we as a committee want to get a future. So I think that's helpful.
Yeah, we're walking this. I appreciate that you want to hold some of the process discussion. It's kind of makes it into it. But think to this point, and Scott, we haven't had the chance to meet, so I appreciate your candor. 11 pages of adjusting entries. I think what I'm hearing is this was probably not typical in prior years.
Except this year.
Agreed.
And then there's one adjusting entry in particular that caught my eye. This plug to open W2S TS of 1.6 million.
Could you read that description one more time, please?
It's a reclassifying journal entry, and it says plug to open WTB.
Okay.
1,004,000 and some odd dollars.
This is a 24.
This is
One
20.
of, one of the funds that we got from the town included where the trial balance was closed, where revenues and expenditures had already been closed to fund balance. So that's an entry that we need, so when we got the trial balance, the ending fund balance as of June 30th, 24 didn't match back to the prior year because it included current year activity, current year net income, pardon me, revenues and expenditures. So that's simply an entry to open up the trial balance so that the beginning of the year equity matched the prior year equity. It was a product of how that trial balance was run by the town and given to us. There are times when we have sent emails, probably to Concord, we've sent it to other places, and we actually have a little screenshot that we send them and say, you got to check this one little box here. So it gives us an open trial balance versus a closed trial balance. When this occurred in one fund and one fund only, we chose to make a reclassification entry rather than request a whole nother trial balance. And it was just the easiest thing to do. That entry, I can understand why it creates the question, but it was simply for us to open up the trial balance so things would match in the prior year. And in current year inflows and outflows would show up on the statement of revenues and expenditures.
Which led to my question earlier about what adjustments didn't get on this sheet that are out there and what was the materiality threshold that was used. So it would be interesting to see that information.
Sure.
And this adjustment, I'm looking at a very detailed sheet. I don't remember seeing that back there.
I didn't see
No,
that.
I don't, no, last year, Scott, you gave us a very detailed assignment. I don't know where you got this one, but we should all as a committee get that. I don't know what this one was, so.
So if I understood the answer to his question correctly, that was the difference. A plug that needed to be fit in order for the accounts to balance, something just an adjustment that was made.
I would agree with that. It's terribly unfortunate that my firm used the word plug in that situation. That's probably that's a poor use of a word, because it implies that something was just plugged, and that's not what that reclassification journal entry is about. It was simply to flow the current year inflows and outflows through the operating statement. And again, that's why we probably should have pushed back and said, you need to run us another trial balance, and here's this box you got to check so we don't have to make that entry. Yeah.
Can I just quickly, so Brian, did Brian Larson drop? No, he said, I know he had to. Right, okay.
Brian did drop.
Yeah. Okay. Brett, do you want to keep going on the comments? And we can
Not
go
only
into
this,
it.
let me take back control. I
Right.
do have a lot of questions.
All right, so Sandy, let me just ask you, do you have some questions here as it relates to the financials? And if it
No,
goes into.
I think Bianca kind of asked the question I had if there were other outstanding things that were not a part of this, but Scott, if I understand the answer, nothing that rises to the threshold that would change your overall analysis.
Yes, I agree.
Perfect. All right.
Look, Scott, one of the questions I had just about the report in general, and actually the management letter, is that in prior years, you always gave a status on the prior year management report findings. So this year you focused on 4 specific material weaknesses, and then there were other issues that were documented from last year's audit, and you didn't really go into a lot of details on those. I do have some questions on them, and maybe you can answer them quickly. One was a comment about including all our trust funds, which I think in the financials are what we refer to as fiduciary funds. They looked, I just wanted to make sure that 100% of all of them are now represented in the financials, because it looked a little lower to me than what I thought we have reported in total.
All of them are in the financial statements, yes.
They are. Okay, so maybe I want to just understand, we can follow up with Jennifer, because our year-end balance of book value in our town report looks higher than what's in these financial reports. So maybe it's a question about book value. When you put those in, it's book value on the balance
In the financial statements, they are at fair value.
at fair value. Okay, maybe that's a discrepancy. Okay. The other question I had, last year's audit, there was a question about the school committee not providing the bills that justified their invoice, the warrants that they've submitted to the town. Has that changed, and is the school committee now doing that in your results?
By recollection, this is where Sarah would be
Okay,
invaluable,
all right.
but she couldn't be on this call. Is that
Okay.
I think roughly halfway through fiscal year 24, I think that process changed.
Okay. And then I just want to ask, were there any open issues around accounting for leases? Because that was something that was raised as a potential, something to consider.
It's still, I say this to majority of clients, it's still something that I think you should consider outsourcing. It's an onerous accounting standard for local governments. And when it comes down to resources, sometimes an outside service provider can be an invaluable asset to the team.
And then the last one, which I know you spoke to in the report itself, but were there any concerns with the encumbrance process at year end? I mean, I know
Were there any what about the encumbrance process?
issues about the encumbrance process that you saw at year end?
I still think there's some deviation between your policy and your practice. Your policy is fairly vague. As I recall it, you can encumber for a specific purpose at some later date. Your policy, that's your policy. Your practice is to be a little bit more lenient with encumbrances. There may be not a specific purpose where your policy calls for a specific purpose for the encumbrance. Sometimes there's money that's encumbered generically. This is something that has gotten substantially better over the last couple of years. I think it continued to improve in 24, but there's still some misalignment between your practice and your policy.
Well, thank you for validating follow up. At this point, we started to delve into the particular material weakness issue. So I think we talked quite a bit about the reconciliation of CAP. Does everybody feel comfortable that we talk that issue through?
I would still like some clarification, especially on the water and sewer. Is that so the thing, or is that a separate system like the light plant operates?
Yeah, yeah.
And so the light plant operates that, and it's now going to be all in the new system. It's all going to be brought together.
The new accounting system tracks the payments in process, but it does not necessarily track the billing in process. So that's where we're relying on the outside system for both. And then once it hits the new system in payments, it's not reconciling. If we get, say, this is how much it was billed, and we have payments, then they don't match because we haven't gotten records of abatements or adjustments or any other changes that have been made because they've been given to us in a net entry that may or may not be inclusive of other items outside of receivables.
Does that mean
That was a lot.
Tyler or offer a billing?
Yes, and we're going to investigate that as a possibility. Right now, we have the luxury of the unified bill through this other system. If we were to move to the utility billing through Munis, it would be two bills. One for water, sewer, stormwater, and solid waste management. The other would be electric. CMLP would stay in that system. We haven't fully vetted process on that.
So we had a long-standing goal set by former administration to have a combined utility bill. And we have done that. And there are definitely issues with that. the NISC system that the light plant uses, I think it is designed for an electric utility. It's very good for an electric utility. It can handle those complex rate structures. It's probably overkill for everything else, and it's probably more expensive for us to be running all of the other utilities through that system. And again, it's a separate system, the light plant on a separate fiscal year from the town. And we would like to investigate, now that we have the Munis product that has a water and sewer utility system that is used by many other communities, bringing that piece back in and keeping the light plant as a standalone.
And that is in the works.
It is
In discussions.
Yes.
And so until we really, if we don't merge that back to take it away from NCIS to the Munis system, this cash reconciliation or the receivables reconciliation is going to continue to be a problem. Is that what I understand?
We're working on a separate process for capturing the changes, the billing changes, the actual billing in a commitment format for trying to make them work together. So it's a matter of finding the right reporting, and bills go out 3 times a month. So then you've got bills going out, changes happening to those bills, new bills going out. So it's a evolving process to capture that, all of that activity in their billing system to then translate it into ours. We're working on figuring out how we can do that in the most reasonable way.
Okay. But until this is not going to be reconciled.
Right, that is a process that we can change a lot faster, I think, than maybe implementing the new billing system. So again, we're in discussions on how much effort do we put into one fix versus the second fix.
I think it'd be helpful for a future committee meeting is to get educated on the structure of the people and the systems we use across the town and the schools.
I think that'll be helpful.
Structure, process, outcome. Our outcomes right now are not good, so we need to go upstream to understand these types of things.
And just and to kind of bring in this issue with Percy, what is the, how much, there's probably in here somewhere, but what is the how much in receivables are we talking about in the water and sewer?
It's definitely in here.
That's
Right, so I said it was like 100,000.
at the very
Variant.
Yeah, variance. Yeah.
Yeah, just, it was, I mean, total receivables is
Much.
millions.
Yeah.
Right.
So again, $100,000 is almost immaterial.
Yeah.
To the total
So
stuff.
what here's bills are going out 3 times a month.
It's
Cash is
just
coming in. Just
Every day.
keeping track of that
Yes,
is probably a big labor. Laborious process.
And the bill's not just,
so you get your bill once a month, but a different section of town gets their bills. You get yours on the 10th, a different section gets theirs on the 20th, and somebody else gets theirs on the 30th. And that's just the way that the reads come in and the way the billing process is.
And the adjustments are not well.
And then you call and say, I filled the pool from my well and I want an abatement for that, and those come in as called as well, so.
Sounds like a big project.
It is.
But it
A lot
also
of-
sounds like a big opportunity, actually, from
Yes.
an administrative cost perspective and just.
And that's why we're discussing other options.
All right, well, that's definitely on. How should we go next to, we spent a lot of time on cash.
Hey,
receivables.
Wendy, there's somebody who's actually Bob Conry from the schools who's raised his hand, wants to make a comment.
Is this regarding the cash receivables or?
I believe,
Okay,
I don't know if this is the right time for him to respond, but
was it?
Bob Conry.
Okay, yeah, let's let Bob speak. Probably Bob.
I had heard a comment about or question about CPS warrant process and invoice backup, and when that was brought to our attention, we immediately started attaching invoice copies with all of our payables warrants and send them to the town accountant. So that has been addressed.
Thanks, Bob, appreciate it. So we also, maybe, at this point, one of the things we could do is just actually ask Jennifer to speak to the other items that we responded to in the 2 weeks. There was and this was in the meeting package, but it's worth reviewing it and asking Jennifer questions. Why don't we start with that cutoff and the capitalization expenditures? I know you have to get in the packet of response, but I'd like to hear it.
Right. So we took this to heart, and this is something, cutoff for capitalization and an end of year process is something we can really only physically address once a year, but we can plan for it. So we will possibly see some of those same issues arise at the 25 audit because we hadn't made any changes during 25. We hadn't had these 24 results. So if we see this one again for 25, we won't be surprised. We are working on putting together a department-wide notice of schedule and taking the opportunity to firm up our procedures in processing those end of year items. I think some of it comes down just not realizing that you're paying a June bill that has a July date in August, that kind of a thing. So being more aware, knowing what to look for. We have a very young staff in many departments, so it's going to come down to education. They may not have known that this was something that they needed to pay attention to. During the year, I can pay a September invoice in November, no problem. But that June, July cutoff is important. So we're going to add extra due diligence to the processing beginning in May with outreach and training and through June to make sure we're not paying future invoices for, say, dues or registrations or anything, prepayment, or in July for things that were for June without encumbrances.
And I assume just on the topic of education, we've now had the municipal conversions that we've got a lot of issues and challenges on training, documentation of procedures, et cetera. And I assume that's part of what you're digging into, is sort of all those procedures and processes. Yes. That's good.
Wendy, I actually have another question that kind of relates, that reminded me I have to explain more on the journal entry side though. We backtracking.
Quickly, yeah.
Just because I think it's important, like, I like digging in to get the stories, because then I think, not knowing anything about I've been a consumer of financial statements in my career, but that's very different than being, inside an accounting system or knowing anything about auditing processes. So, so when you said, I think that you were trying to train and get people, up to speed, and I remember reading that there was now what was recommended that for, I think, the capital accounts that an assistant, the treasurer and the treasurer work together to reconcile those. On the journal side and the journal entry side, I think all that was said here was just that that there was a breakdown, but it didn't really explain the breakdown, town experience and breakdown. Oh, hold on. Breakdown in monitoring control. Maybe that's after, I'm not sure. I might be jumping around here. If this is jumping around, we can pass this question on to later. But do we have a history of who was doing this previously in years when there wasn't a problem?
So this particular, I'm assuming we're jumping forward to the.
Oh, sorry.
Which is totally fine.
It may apply to all.
It may apply to all of them, but there was staff turnover and reframing going on in the accounting department during this particular fiscal year and the next particular fiscal year, and we're continuing working on training and evolving processes. So this particular one, the journal entries, is something that it's almost like an overnight fix. We need to make sure that whoever is putting together a journal entry at the direction of somebody then has that journal entry checked and cross-checked before posting. That's the simplest solution, and it's an easy solution. Having only one person in charge of making journal entries for any particular reason is always a challenge. And it depends on what they're making a journal entry about. Sometimes it's as simple as I booked this expense to the wrong account. Getting the information, getting the backup, preparing that journal entry, and then having somebody else cross-check, making sure you've got your debit and credits right. That's as simple as it comes down
And
to.
so you actually, maybe you could just
Yes,
say
so-
which is, how does that happen?
Right, so we have our town accountant with us today, and we have an assistant town accountant downstairs, and the two of them will both make journal entries. And so we've established that if one prepares an entry, the other one will check it. Generally, we'll probably have the assistant accountant prepare it and the town accountant check it and post, but it may come in the other direction, if something might get sent directly to Rich and he's, or if he notices something that says, you know, this needs to be fixed, check my entry.
So if I understood correctly, before it was just anybody could make a journal entry.
No, it was just the town accountant prior was making all of the entries, I'm assuming, yeah.
It's basically
In
one
this
set of
year.
eyes and two set of-
Yes, exactly, without that cross check.
And now you have a cross check as of December, so you put these procedures.
Right.
But we're talking about turnover, so this, you're new? Or
We started 2 years ago in that position.
I guess that's what I'm trying to get at is we didn't have a problem before. It was noted as not so much of a problem and you noted turnover in the department.
Right.
And I'm trying to figure out like, well, but if it's the same accountant and the same people, the turnover didn't really affect this.
Without getting into a lot of detail, the person who was making the entries is still preparing the entries, and now they're being cross-checked by their supervisor.
Okay. So turnover was or was
There was a change of roles within the department.
Okay, and that involved one person.
Well, multiple in the process.
How many?
2, 3.
I don't know.
Three people. And it comes down to the person who's in the supervisor role is new to that role. So learning those processes and expectations. That's the training and opportunity.
Okay.
Appreciate your new. Right. I've looked at the management letters because this kind of piggybacks off of what you're probing. I've looked at the management letters back to fiscal year 19. There have been issues in the letters every year from 19, many of which were continuing. But they were never categorized as to their level of deficiency. Was this the first year that we categorized? Or were the other prior years going back to 19, they just didn't rise to a level of significant or material?
That's to you, Scott. Yeah.
Scott.
I think he spoke to somebody earlier, but yeah.
I had gone on mute and it took me a second to come off mute. This is the first in 2023, the water sewer receivable issue, we rose that to the level of a significant deficiency. And I've spoken just a few minutes ago about the overall receivable reconciliation. You know, when it wasn't performed during the fiscal year, that in our judgment is a material weakness. The other comments, maybe let me step back. From an audit perspective, there are really 3 categories that you would put a control deficiency in. One would simply be a control deficiency. For the most part, that's what you would have seen in the management letters going back to 2019. The next step up is a significant deficiency, something that in our judgment, we are required to report to those charged with governance. And then this year rose even a further level. Some of the issues rose to a further level of the material weakness, which of course has to be reported to those charged with governance, as it is more significant than even a significant deficiency. I'm hoping that answers your question. I think I did, but if
Well,
not,
I think it's really like a line encumbrance policy in practice. That was mentioned in 19, 20, 21, 22, 23. Never mentioned as a material of significant deficiency, I guess just a control deficiency. So I was wondering, was this the first year that we actually categorized them? And they were actually significant or material in those prior years?
no, we're not categorizing. The misalignment between your policy and your practice is not considered a material weakness. It's just something that we noted as a control deficiency. And at the top of this meeting, I spoke about, the changes that have gone on from Melanson to Markham to CBIZ. Each firm sort of has their own policies and practices. Right now, we're issuing significant deficiencies and material weaknesses. Those other issues that don't rise to those levels, the control deficiencies, the misalignment of policy and practice, that's something that gets verbally discussed and not put into writing.
And
Go
to
ahead.
at this point, it'd probably be helpful at some point to understand whether these things that were in prior years, whether they fell within the four material weaknesses that we have this year, or these prior issues that were raised for years and years and years were resolved. Because then I think it also gets to your point, is this something that's just been going on for 6, 7 years? And then when we have an absence or turnover in CFOs when things really got rough. But we never had a good structured process on managing finance team, at least within the years that I've been.
Yeah, what I'm gathering is that this has been an ongoing issue. It's just that this past year, if the numbers got bigger.
Well, for this particular cash receivables, as Scott said, it didn't happen at all for a full year. And that's pretty significant. So that
Yeah.
definitely speaks to a lot of change going on in the finance department, for sure. Some of your other points about the other comments, I think I tried to comment and ask about them, so they are not appearing here now as an issue, which to me means they're not rising to the significant deficiency or material weakness, but we're aware of them. And it sounds like they would have otherwise been in conversations with management separately. And so, I asked about the leases because that's still a recommendation.
Right.
The encumbrance process is still something that there's an issue about. But it's a policy versus practice. And I know Jennifer's heard from, but if we want to raise that as a follow-up item with Jennifer.
I think Scott could say a lot about the encumbrance practice. I mean, I can tell you and maybe Scott, since you've been here longer than me, the encumbrance practice has been an issue with Concord since the beginning of time. It was a struggle for me when I started, and I actually asked the auditor to include it in the management letter as an issue because we had a practice that did not align well.
I agree with what the town manager was saying. Several years ago, there were a number of encumbrances. Forgive me my memory. I'm not going to categorize this exactly how it's in the accounting records of Concord, but for future needs or some terminology like that, and that's for something in the future. And those dollars would sometimes get into the millions. And through June 30, 2023, which I have in front of me because I have the prior year management letter, it was down to you liquidated about $670,000 in fiscal year 23, but you still had a couple $1 million in encumbrances on the books. I don't have June 30, 24 numbers at my fingertips.
This is more directed probably us as a committee, rather the auditor. 18, I was just writing down some number. 18 years of my career has been as a sitting CFO. 12 of those as a public company CFO. 10 of those were subject to Sarbanes-Oxley. So I lived through having to implement. In my 10 years of a publicly traded CFO, I never had a single material weakness. to have 4 in a year is, to me, is just astounding. And I know you weren't here, but we really do have to get an understanding below the surface.
Yeah.
What is really going on for our students?
I think it would be helpful, and again, maybe today is not the day, but to like here, okay, there was turnover. But to, again, not to have these account records on for an entire year. I think it would be helpful to hear from the accountants and staff directly. Like, what's going on? You know, a year went by. What happened? Tell us what
Yeah,
your
and
experience.
more importantly, what do you do? We will be talking in a moment about the 25 audit, so we need to also, we're gonna be getting new information on the 25 audit. Some of these trends might still be there, but to your point, what do we, obviously this has happened, but what is the current leadership doing about it right now? What do we know about it? What have we done about it? So I think it's appropriate to ask that question. So I think one of the things that we can have Jennifer do is provide some of that back. In more detail than what we're discussing just in this note.
Scott, in a typical year, when would the audit start and when would it end?
23 was a little bit delayed, and 24 was we received some last minute information, as was on one of my slides in October of last year. Generally speaking, without doing any homework, you often filed your ACFR by the end of December. There were some years, going back a handful of years, since that's really what I think the question's getting at. Sometimes that December year, publishing your financial statements by December wasn't possible. There were some years that the OPEB valuations weren't ready to be incorporated into your financial statements. So sometimes that would bleed into January. I think I'd also bleed it into February from time to time.
And so then in fiscal year 24, was there an audit plan that was shared with either this committee or CFO or the town manager that had timeline, who was going to be assigned, fees, all that?
There certainly was a discussion with fees, in timeline, yes. I don't know that it was shared with this committee. I can't, I think the minutes that were approved earlier were from November of 24. I may have been at that meeting. I probably was. The conversations on timeline dealt with, they first started out as when was the town going to be ready? I think there was discussion about needing to outsource the cash reconciliation. And then when things started to come together, March of 25, cash reconciliation getting completed. We started getting final trial balances towards the end of fiscal year 25 for fiscal year 24. And we also had, at that point in time, we had some competing issues going on. There were, we were a year late, and we put enough resources on this to get it done, but we were also on to our 25 audits at the time.
Do you know how long Sarah, Andrew, and Zach worked up with in prior years? Are they new to the 24 audit, or had they been working with the town for years prior?
Sarah has been the audit manager for many years. I wouldn't give you a number, but it's many.
And Andrew and Zach?
Not so many for Andrew. Andrew, he was the audit manager on the CMLP audit. I believe there was a little bit of crossover into the town. And Zach, 23 may have been the last year he was even present on that engagement team. He became a manager like Sarah at that point in time, and I rotated him off, I believe, to some other engagements. But Zach had been a member of the audit team for a number of years as well.
So then, but wanted to get at is then when did you realize, or when did the team realize that there was a material weakness, or there were going to be multiple material weaknesses, particularly since you had folks that had tenure on the audit? When did it become evident?
When it became clear that, the trial balance wasn't ready because the June 25 trial balance wasn't ready because cash wasn't reconciled, and receivables weren't reconciled. And that would have been, I have a timeline somewhere. I don't have it at my fingertips, that was probably be the early winter of a handful of months after year end, maybe December 1st of 24.
And was that communicated to Anthony or to whom?
I've had plenty of conversations with the then finance director. Carrie and I have communicated it as well.
So then you probably have pretty good insight as to what's going to be the news on 2025, which is what I'm really kind of drilling at is we should know what it's, I guess.
Yeah, so
right.
I want to interject here. So actually, this committee did get sort of our traditional audit calendar schedule. So, when we last met, we were hoping to move right in with the 24 audit. And we were legitimately at that time way behind. And we were talking about that audit process starting right away. Typically, it is the sort of January timeframe where an audit would be done, but we knew it might bleed further into the year. But that's as far as we got. And then it became just behind the scenes, the audit process. So at this point, I guess what I'd like to do is hold off on this discussion and for us to wrap up our questions for Scott. And I know Scott is coming back in 2 weeks, so we have more opportunity to follow up if there are any more questions. But we also have a couple other agenda items that I want to make sure that we get to. Let me just ask, is there any other sort of burning questions on the material weaknesses?
Specific to 2024, I lead a company that's a government contractor. Under our contracts, if we have material weaknesses, because we're taking state and federal money, we haven't had this happen, but we would have to have a remediation plan and we'd have to report this to federal and state authorities or entities. Do we have any reporting obligations to the state or the feds if we take any state and federal money? It's a good question.
Yes, and that process occurs when the audit has been uploaded to what I'll just call the Federal Audit Clearinghouse. It's a huge database that any audit of a government that has received and expended over a certain threshold of federal dollars, when that gets uploaded to the clearinghouse. Lack of a better way of saying it, there's some boxes that we check when it gets uploaded, and one of those boxes would indicate that if there are significant deficiencies or material weaknesses in internal control. Now, with that said, I've been doing this a long time, and I've issued probably hundreds of reports that include material weaknesses and that have been uploaded to the clearinghouse. And just by way of information that I'm sharing, never seen an issue come from it.
Okay. Ever with 4?
Oh, yes. I've issued some with more than 4.
Okay. Thank you.
Maybe we should internally follow up because I don't know we are recipients of federal funds, so I'm not sure what those regulations require. So we should follow up. Good. Good questions. Okay. So at this point, Scott, you've already acknowledged that you'll be here in 2 weeks. We'll be able to talk about the light plant audit as well as CCRSD. So we will see that. I assume we'll have any management letters that are associated with that as well. And this committee will get those audit reports out within the week. Sure. Anything else for Scott? I know you appreciate it.
Well, 2 weeks from now, we have an agenda that's a little more expansive than this one. And we need to allocate some more time. I think people have made the case pretty clearly that we need to look more closely at what occurred, why it occurred, how it occurred, with the interests of greater assurances that it couldn't occur again. And then there's another, so I'd like to set the table really properly for 2 weeks from now. And in coming to this meeting, I was also thinking about our own responsibility. We're advisory. And we want to stay in our lane. We want to fully understand what our lane is. I know that I reached out to you several months ago, I guess 2 months ago or so.
Yeah.
And my concern was pretty genuine. We got to meet.
Yeah.
But that was really sort of the the communication that said that we gotta pay attention to the fact that we're not meeting, that in itself is a concern. And it points to other issues that we had. I don't think we're here to stir things up. I think things already were stirred up,
Yeah,
so to
right,
speak.
right.
And now what we're doing is we're dealing with the fact that they were stirred up. So again, my plea is let's set aside the necessary time as prep for 2 weeks from now. Because we've done what we can in the short time we've had today. But
Right.
and then we set this for 90 minutes. I don't know how long we're here.
Yeah, well, let me just ask, we have 2 audits to go through at the next meeting. That was based on the auditor's availability, so we can hear those audit findings and then stop and just talk specifically about the town in the same meeting, or we can schedule an addition. And it may be that's what I anticipated,
setting a third meeting.
the setting, I think we need that, yeah.
Or-
Right.
We're on that too.
Right,
Yeah.
so.
I just want to be cognizant of Scott's time
Yeah, no.
presenting, and then discussions can certainly happen after. We can certainly communicate questions and pass along answers as well.
So I think we have what we need to partly to follow up on today's audit. And so I guess the question I have is, would you like to meet in a week? Should we have a meeting following the other meeting that we already had scheduled? Next week is a vacation week for some people, so that probably doesn't work well.
Option number 2, because then you through us can make clear to town staff how that the subsequent meeting gets set up
Yeah.
and what to anticipate. That sounds right to me.
Yeah,
Yeah.
and Wendy, I want to just acknowledge you said you know, your focus is on things going forward. And I think that that's a great objective, but I think that it's hard to go forward when you understand.
Yeah.
And I think having some history and background of and understanding, then once we know what happened, then we can better assess whether the plan going forward is adequate or not. And so I definitely don't want to dwell on the past. I'm not someone who likes to dwell on the past. But I think having understanding of what happened is important in order to say like, hey, okay, so going forward, this plan makes sense, or, you know, given what happened, maybe some other things need to happen.
Right, no, I didn't mean to underestimate that. I think we've already agreed that we're gonna ask Jennifer to come and provide that background document and perhaps also the system, some more insight into the system complexities that we have.
Staffing we have
The staffing,
you
yeah.
have the right staffing so that this doesn't impede itself. What was the
Right.
staffing that I totally agree with?
Right, and you know, we have new systems. Are we comfortable? Are we fully trained? Do we need more resources to make sure that we've got the people in place and the efficiency that we can. And clearly, we've seen some opportunities for the future also from the systems perspective. So I hear what you said, separate meeting. We'll plan that agenda more appropriately, can certainly see background, so that can help inform our feedback back to as well. So, Scott, thank you for staying with us. I do want people to stay because we haven't finished our agenda yet, but Scott, I know you've been waiting patiently, but I think we've got everything from you today that we need, and I appreciate you being here, remote that you are, and the presentation and all your work for your team as well. Thank you.
Thank you. Have a great afternoon.
All right, thanks, Scott.
Thanks, Scott.
All right, I know that we are way over time. I just want to just quickly talk about our next set of audits, what's coming, and also just acknowledge to this team, in the interest of transparency, as I know that Mark spoke to, some of us on this committee got an email on Friday alluding to the availability of the regional audit that was available in September. I want to apologize to this team. I was not aware that that audit was available. But I'm just acknowledging that there's some, again, more information out in the public than other communities aware of. I was aware that that audit was completed in December, but I was also aware that our audit was getting completed. So we will do better in terms of getting the information that we need out to this committee.
So say regional, I mean the Concord, Carlisle region.
Yeah, CCRSD. So, and I I don't even know if we have that audit in-house, I assume we do, along with associated management. So, that's what our focus will be next week. And what I want to do is just talk briefly about the auditors that we have. I know that, Jeff, I'll ask you to speak to these. I know that the regional audit, where the Bob and others have committed to have a three-year contract with CBIZ.
So, yes, so CBIZ is working currently on the FY25 audit for the region, for CCRSD. And they are, I believe, either in the final stage or have completed the CMLP under 24.
Is there
And
any risk that they won't be done?
well, that's why right.
Scott said he delivered
He did.
those, and I think
They have.
I think Jason mentioned that at the meeting this morning.
Okay, so we'll have those available.
Yeah, they just talk about it, but sometimes what happens is the audit's done and then management response is not, so.
Right.
When we say it's ready, you need.
Yeah, I guess I don't get to talk to them.
I didn't send anything.
Yeah.
Right. So and once you think that somewhere else, I didn't come from me yet. I was planning on getting through one meeting and then preparing everything for the second meeting. The calendar 25 CMLP.
Yeah.
Not the one that we just received it, it's for 24, but the 25 audit has been picked up by a different firm, Goulet and something and Associates, located in Worcester, and those are currently in process. They did have that inventory done in a timely manner at 12:30, and they're working on finalizing that in the next short period of time. The so the school audit is CBIZ for FY25. The calendar 25 CMLP is with Goulet. For fiscal year 25 for the town side, we have moved to a new firm called Roselli Clark and Associates. They were in-house last week, and the week before they were here in our conference room gathering data, testing information, talking with staff. And they are currently working on the FY25 financial statements and subsequent management letter and single audit as well. So we anticipate seeing those in the next few months for FY25. They are also, so we've signed a 3-year agreement with them for the town side to have them do FY25, 26, and 27. They'll anticipate starting their initial testing and other work in the fall. So we should be able to get back onto our what is perceived as normal schedule for 26 as well.
So I just, you jump on this. One of the things I want to acknowledge is that it is one of the responsibilities of this committee to make recommendations around auditors. So
yes,
I'm hoping that while you just said you signed a 3-year contract, that we are going to have an assessment of that, of the audit that they performed, and then present that here.
Yes, so because of the timing of the 24 and knowing we needed to move on, there's really only about 3 firms that actually do this generally in large communities. We have the opportunity, we could have saved the CBIZ. We would probably not have gotten to be able to start our 25 until late next summer. Another firm that does this work, we've been using as consultants for some of our transition in staffing and other software conversion. So they have their hands in our books already, so they cannot be our auditors. That left the third firm, who is a company that I've worked with in other municipalities. Ryan has worked with them in other municipalities. So we had a relationship with them just to know that they are just as good. And they were able to squeeze us in a timely manner. And that was our focus and our priority, was to reset and move forward and get back on track. So weighing those options was something that we had to do within days of my arrival, whereas we still didn't have the 24 audit. So
CBIZ, they couldn't start the audit because why?
they're still finishing several other towns' FY24 audits. They're already booked for their 25 audits. They had not reached out to us to try to schedule the FY25 audit. So we we didn't even know if they were intending to do our 25 audit. And so we needed to make a decision as to, do we reach out to somebody who is already busy and working on other delayed 24 audits as well as 25s? Or do we start with somebody fresh who may give us some other new validation or other new things to work with?
I'm not, in support or opposed to CBIZ or any of the other firms, but I think it points to another breakdown. Because we've had such a history with Scott, if not CBIZ. So I think that deserves our attention too.
Sarah as well. It's one thing to get down, as we all know, Zach, I think he's someone that didn't grow up in this world, but you junior people, they get promoted and they get moved off, but when you get stability with Sarah, where was Sarah? Like,
Right.
she hear this, or did they just give up waiting on us? But our authority comes from the select board, so didn't the select board say, make a change?
It was not a discussion that happened, so that's, I did request that it be part of this. They just acknowledged that it is part of our responsibility as the financial audit committee. But we didn't even have an audit to review or even discuss, so.
Oh, put that aside, and changing
Yeah.
the audit from.
Like,
Auditability was given to this committee and then this committee didn't meet, so then the select board.
But were you aware that that picking the audit firm was a responsibility of the audit committee?
I discussed the challenges we were facing with the town manager and you other, and somebody else as well that had a conversation to make sure it's
Just to be clear, we've had many conversations about the delays in the audit with CBIZ and the challenges of working with CBIZ. I will say that, I'm not gonna say it because Scott was here, but we had, even starting last year, trying to get last year's kind of done, based sort of a constant battle. And I know I was asking Carrie to call out and to talk to Scott. It's just been very challenging to move things forward. I don't have no detail now, I just. Yeah.
My observation of the outside is it captures and reconciles, there's nothing going on it. Pretty simple, so maybe the blame isn't CBIZ, maybe it's the internal accounting. They weren't ready.
It's fair. I will say it was a combination. Once that information was ready, it still took another 6 months of that should have been if it was that one piece. So there were delays on all parts, and it is what it was. So understanding that, we made sure that when FY25 closed, that we got that prepared and ready for when the auditor said that they needed it, we had it ready. CBIZ was not proactive in making sure we were ready for them. They didn't reach out. They went 4 or 5 months without reaching out to say, are you ready for us? So that was also part of the delay, was just the responsiveness of the company.
So the point in all of this is, in fact, we've all got to work toward making these new relationships effective.
Right.
Because if there's 3 firms in the world, we can't repeat this issue.
Well, not only that, but this charter or advisory committee charge was first adopted in 2015 and amended in 2016. So you were the CFO when this was adopted.
Yes.
So you know that the responsibility of selecting an auditor, at least the direction to go out and find one, is us, this committee, and that didn't happen.
Right. And 3 year contract was signed, everybody, without talking, maybe anything.
Well, I'd like to think that if we have an issue with this audit, with there's provisions in our contract to change that, but let's not get ahead of ourselves right now, but.
And let's take a certain measure of a little bit of satisfaction in the fact that at least we've got audits underway.
Absolutely.
What if they've been suspended because we were hung up to CBIZ? How does it work?
Yeah, no, but-
I'm not justifying or explaining away anything. I'm saying it's good to know that we've got traction.
Yeah.
You know, in the future, we could get just like an email out to, if the committee, the audit committee doesn't meet, maybe that should change, but maybe an email to say like, hey, audit committee, we have a problem with our auditor. We need a new auditor. We need you to meet to.
Yes, definitely lesson learned, so.
Well, in my career, I never asked the audit committee to do my job, but there were times when I would say to an audit committee, I need your help. I need attention from the audit firm on this, but they never wanted to be in your role, right?
That's a good point.
Yeah.
Okay, let me just move on. I think we're ready to move on. We have our next meeting date. We will work, we'll send out, maybe just a survey monthly about people's availability for the week following February 27th. And then we'll be that conversations on some next steps. It goes to the town audit. We'll do it now, but Jennifer, you can sign that up, right? Yeah. Again, I apologize because we're now 25 minutes over, so. Make a motion to adjourn.
Can I just add something to the, because we're gonna be on the light plan, and I have some issues of going forward, things that I'd like to put on the agenda for the life plan. And that's just on the audit cycle versus when the DPE reports go out. It's been an off cycle thing, or it's not been clear at all to me, and I have, so that I do have. I can make sure
You can forward me that agenda
Can
item.
you send it to both of us and what's behind it? Because I think we might need to talk with Jason.
Yeah, when there's Terry's prepared.
Right, yeah, and I'm meeting with Jason on Friday.
So I asked for a motion to adjourn. Is there a second?
That's okay.
All right, Sandy? You roll call.
Yep.
All right.
Aye.
Just do a roll call to adjourn. Brett?
All right, Bishardi.
Yeah,
Aye.
Lord, aye.
Aye.
So yeah. All right, thank you all. I appreciate your.